the investment world, so coming from a bank going to the investment world, especially impact investing, it's a totally different world. I think it changes the way you look at things. Over the last 3 years, we have worked with more than 25 agri-sector businesses and helping them secure debt financing. To provide a debt for a company is nowhere near when you come to an investment world. Yes, government is making changes in terms of regulations here and there. Admirable capital market introduction, very encouraging. Currently, as we speak, a lot of transaction is happening on Telegram. A lot of transaction is happening on Facebook Marketplace. A lot of transaction is happening on TikTok. I believe Ethiopia can be a powerhouse in Africa. And for that to happen, we need to see capital moving from one place to another.
Today on our forum, we're joined by Yoseph Getachew, an accomplished investment advisor and the CEO of Zuri Capital. Zuri Capital provides advisory services to financial institutions and small and medium-sized enterprises across the private sector. Yosef brings a wealth of experience across banking, economic research, and portfolio management. He has held key roles at Zam Bank, from business development to economic analysis, and later served as a senior advisor at Renew Capital. Yosef is currently a CEO at Zuri Capital, providing advisory services such as feasibility studies, valuation, due diligence, and transaction support. Thank you for coming, Yosef.
Thanks for having me.
You spent nearly 7 years at Zam Bank, working in various roles from foreign permit officer to business development and research. How did this diverse experience help shape your understanding of financial services and the market?
Yeah, so in Zaman, as you know, like Zaman was established around 2008, and back then banks used to close shops during night time. So it was a time where Zaman kind of employed a different strategy where the bank didn't have any branch. So I was among initial employees at them. So it started 2008. I joined 2010. So the freshness was still there. So I started like as a tailor. So, but because we kind of employed at them and employed a different kind of strategy, so that kind of opened the door for me to understand what banking is at the time. So I was very curious to understand what banking is. So in terms of domestic operation, it means like account opening, anything that's related to transaction between banks, between companies, between individuals. That's where I kind of like, okay, this is how Ethiopian banking works. But then I went to international banking. That's where your trade finances, LCs, international transactions take place. And finally, during my last 2 years, I spent majority of my time doing research, new product development, and also working on some strategic output. So it gave me, like, I would say, a holistic view on like, okay, where banks are in terms of their development, what are the key drivers for banks in terms of their revenue, their growth, what are the key drivers, and also a new kind of model which was not tested in Ethiopia before, more based on a few corporate clients driving growth, but heavy on technology, which I think post Zam Bank, I think a lot of banks have now adapted in kind of the playing field actually now is leveled. But I think as a key player within the business environment, understanding banking is critical for any service provider. So I think if you look at our experience for the last 3 years, we have had done majority of our deals are actually date transaction because of the affiliation and the understanding and the previous relationship that I built working for a bank.
Ethiopia's banking sector is experiencing a significant transformation under the homegrown economic reform agenda, particularly by opening the financial sector, in particular the banking sector, and the emergence of digital financial services. This decision to allow foreign banks promises new capital and competition for the banking sector. The digital financial sector has also been opened based on the national payment systems proclamation and its amendment and the National Bank of Ethiopia directives. These directives set stronger standards for licensing, governance, interoperability, and customer protection of payment instrument issuers and payment systems operators. These reforms have also been reinforced by the recent decision to open the banking sector for foreign investors. How do you assess this trajectory of Ethiopian banking reforms, and what are the key opportunities and risks balancing liberalization, digital innovation, and financial stability?
I think it's evolved, I think, a lot since 2010. That's when late 2010. That's when I started this GC Gregorian calendar. So it has evolved a lot in terms of like you're seeing some product diversification, technology adaptation. Like when I started, like some of the examples might be enlightening. Like I said, the lunch thing is it's funny. Another is ATM cards. It used to take 1 month just to get an ATM card, and so online banking was almost impossible to nothing. It's maybe two banks would offer back then. So these things have changed, but in terms of doing business, I don't see a lot of difference. Like collects deposits, lends to a few, and that dynamics only changed over the last, I would say, 3 years, because of this more small digital financing that banks like Cooperative Bank of Oromia and others are now following, and with the opening of the telecom sector and the introduction of these mobile money products, that has changed the financial landscape over the last 3 4 years. But up to then it was a very slow progress. But even saying that, in terms of some of the major dynamics that are critical for banking, we have not, I would say, made the leap that is required to create like a better business ecosystem. One being is, I think, risk management is still heavy on big assets, collaterals, uh, all that sort of things. I think that is ought to change in the coming years. But I think, yeah, this has been, in my view, some of the development over the last 10 years.
In addition to its broader liberalization agenda, the National Bank has introduced new directives which are aimed at strengthening the governance and risk framework of financial institutions, particularly banks. There are also draft directives on risk governance of banks, which regulate the capital adequacy requirements and establishing internal systems for risk assessment. Alongside this, there's also a corporate governance directive issued by the National Bank of Ethiopia, enhancing internal accountability of financial institutions, establishing board oversight, internal governance systems, and also clearer lines of responsibility among executives and the higher governance structure of banks. In your view, how are these reforms shaping the government culture and risk preparedness of Ethiopian banks, and what practical challenges and opportunities do they present as institutions seek to align with global standards?
I think it's like those two directive you mentioned. One is, I think, risk management framework. Internationally, anywhere else, there is a Basel framework that internationally banks use. Basel 1, Basel 2, Basel 3 with a different changes. In Ethiopia, before this directive, there was a one risk kind of framework. I don't know what to call it, but a risk kind of framework that was issued back in 2010. And as you know, risk and business, it evolves. So your framework also needs to evolve with the current dynamics, right? So in 2010, all of the things that we discussed like earlier were not there. So the risk framework was just not fit for purpose. But now I think a draft directive is gonna change the game forever. Like if you come from banking, people that are working on risk are, most of them are there for disciplinary reasons. Like actually people get assigned there because they have done something wrong in another department. It's like a disciplinary measure, like let's just take them there. So that sentiment, because of this directive, would totally change, because risk is now tied to their senior management's even compensation scheme. So it's gonna change a lot of what we're seeing now, and hopefully, when banks change how they value risk, how they price risk, how they see risk, then we might see a move away from just based on collaterals, other forms of lending and product diversification. That's mainly on the risk framework. On the governance side, so now like one third of your board should be an independent board member, which I'm gonna be I'm gonna be sitting on one of the boards for a commercial bank. So that tells you like people, me, I'm not in banking right now. Like I'm in advisory, but people like myself and other experts would get pulled in and take a role within the board, which is going to be key to provide a different perspective for banks, so that they would change the way they do business. And we have seen this happening at Commercial Bank of Ethiopia, the largest bank in the country, where one lawyer and two other people were assigned. So that kind of gives them a different perspective. So which is, I think, a key step in the right direction. But again, it's gonna take time.
Of course, but having this expertise in the board, in the governance structure, other than the shareholders, I think would have a significant impact, especially in terms of governance and risk management, because it would give it an expertise perspective in many ways. But you know how banks are operating for the last 10 or more years. And now the banking sector has been open for foreign investors, and we're expecting foreign banks to come in and invest. Do you have any specific key considerations that, or strategic advices to the domestic banks that should be considered by the management, so that the banks would be competitive with the foreign big banks that you're expecting to have in the country?
This answer, in my view, should be structured. I think there are segments, as you know, within the banking sector. So, like, based on the NBE's categorization, there is the systemic bank, which is Commercial Bank of Ethiopia, which let's take out for this conversation. But the second, one of the five, there are 5 banks from the commercial banks that are within the mid-range banks. I think for these banks, so the question would be, okay, should we buy smaller banks and broaden our capital base? Should we start capital market related services like the ones that Wagagan and Commercial Bank are doing? It might be investment banking, within that brokerage and other services. And third is, no, we don't need banks to acquire banks. We don't need capital market service. We just need to develop our own niche and focus and do that. So I think the question should be answered from that point of view, and that would definitely be based on what they have done so far. So there are banks that have in the last 3 years developed a huge portfolio for SMEs. So like now they're growing their lending portfolio for SMEs. So those kind of banks can actually like focus on that and drive that home. So depending on what you have done, there is this option for the bank. So I think from a strategic point of view, banks should say and should sit and say, okay, we have done this so far. The market is going to change forever in the coming years. And how do we position ourselves and make, like, not be reactive? It should be more a proactive role. And all these things that we're discussing here are going to take time. So banks should kind of say, okay, this is the roadmap that we're going to have for the next 5 years. And it requires changing the corporate governance. It requires the way we see risk. It requires change in every aspect of doing business. So I think that's how they should approach it. Now, the question is totally different for the rest of the banks. Within the rest of the banks, there is 2 categories. One, there is already a paid up capital requirement that NBE has set forth, and we're expecting it to raise the bar again in the coming years. So there are, I don't know, maybe a few banks that still have not fulfilled that paid up capital. For them, they have two options. One, they either merge and create one bank, or get acquired by the bigger fishes within the banking sector. So I think all these things are going to be decided by boards, and within that board, if you have independent board members with the right expertise, it's gonna help them navigate this challenge. But I think banks should start to act now and not just wait and see. So the second category of banks is they have already made the paid up capital requirement, but are still are small banks compared to the other banks. So for them, again, the same question arises. It's not driven by the paid up capital requirement, but it's driven by the desire to survive in the new market, which is, okay, Ethiopia is a big market, but I think everyone is concentrated on Addis and what's happening around this city. So can we carve out a different strategy where we can compete? Yes or no? If no, then what can we do to compete? And one thing that they can do is, I think, diversify the revenue streams, i.e. capital market practices. So it could be investment bank, it could be brokerage, it could be investment advisory, whatever the case may be. Then the question that then becomes, do we have the capacity in-house to do that? Most don't. So do we bring expertise from outside, or we do business with firms that have done this elsewhere, and we can collaborate with them. We give them the local context, they provide the international experience, and we do that. I think these are the sort of things that they would need to answer.
Due to the recent reforms we've pointed out earlier, banks will be under increasing pressure to reassess how they operate, manage risks, and engage in banking business overall in an accountable manner. These reforms would also bring additional regulatory demands, ranging from demanding credible recovery plans to restructuring the whole internal governance system. Financial advisory firms will have a huge role to play in guiding banks through these regulatory expectations and compliance requirements. How can these financial advisory firms most effectively support banks through this critical period of transition and reforms?
Advisor firms, financial advisor firms, investment advisor firms will have a key role in this, right? Because if they position themselves right, then they have the local context and some of the experience that would be required to thrive in the market, in the future market. So I think one is, I think, helping banks be ready in terms of like specific transaction based support, like maybe IPO readiness or that sort of, or issuing some kind of debt instruments, or that's maybe specific to transaction support. And another is strategic advisory support in terms of what we discussed earlier. They don't have to do that alone, and banks have huge resources, so they can deploy that and work with financial advisory firms to help them navigate how they can position themselves within what's coming. So I think service providers in general will have a huge role to play, not just at financial advisors, but law firms, accountants. All this would have to play a critical role, and their role within the new market needs to step up, and we need to take a step further, because like I've worked in this market long enough to understand that how many advisory firms have a board? Very few. How many of them have corporate governance structure? How many of them have like a financial management structure in place that can actually make them sustainable? When you ask these critical questions, it's kind of like the number kind of like shrinks and shrinks and shrinks in only a handful. So if you have not done that for yourself, you can't support other companies. So I think the assignment starts us in-house. Thankfully, because of the capital market, these are already standards that a licensed service provider will need to fulfill to support. So I think that also kind of puts more fuel on the gas, so that like advisor firms have no choice but to make these changes. So I think once they make these changes, then they would be in a position to support banks or insurance companies, any financial sector player, to make the changes required in terms of strategic advisory support or specific transaction based support.
For advisory firms to effectively support banks and financial institutions through these ongoing financial sector reforms, there must be a strong corporate and financial standing, having clear governance structures, sufficient capitalization, and scalable organizational models. While few firms are having or have achieved these requirements in terms of having these capital requirements and strong governance structures, our reports still show that many are still facing structural shortcomings in terms of inadequate financial resources, weak governance structures, and lack of strategic clarity. These limitations can significantly impact their advisory role and ability to provide the kind of timely, high quality advisory services that the financial sector would require at this stage. In light of this challenge, how do you assess the current state of the advisory firms in Ethiopia, and what key structural and institutional changes do you believe are needed to enable these institutions or have to enhance their capacity to serve as a transforming financial sector?
Yeah, I mean, it's at this point only a handful uh, uh, would be able to support, and which advisory firms have already acquired capital market service providers license, and one of them is international player. So just but from a local point of view and looking at the advisory firms, I think most of them are like maybe 1%. No corporate finance structure, no financial management structure, no strategic roadmap whatsoever. So with that kind of setup, it's very hard to provide support for the banks. So that's, I think we need to step up. We need to step up, and one key thing that you would struggle in the market is finding talent. So I think I think if you ask me where I spend most of my time, it's like not just finding talent, but also coaching and training talent so that they will be able to provide and have the corporate finance skills that anyone who's in an advisory firm like ours needs to have. So I think the one thing they need to do is build that structure. I think for any professional, they would want to see where they're heading, how they're contributing to the vision, and what skills they need to acquire to get there, and also invest in certifications like ACCA, CFA, whatever the case may be, so that the team would have the capacity to undertake this kind of mandates where like we're talking in millions, huge mandates where there is a lot at stake, and these are, mind you, public enterprises. So not just the volume or the transaction volume, but also I think the responsibilities. These are public entities, so there needs to be some kind of level of service that we need to provide for them. So I think in terms of recommendation is like we need to invest on talent. We need to create a clear roadmap for them on how and what they need to do to get where we want them. So I think these two things would be critical, but at this point we only have a very handful companies that are providing the service.
Transitioning from the banking sector to the world of financial advisory at a firm like Zuri Capital, is a major shift, not just in a function, but also in terms of depths that characterize your whole engagement. Banks often work around a single institutional setup and only financial products, whereas financial advisory would require a far more tailored approach, engaging with different corporate clients and institutions, having their own financial corporate governance realities. And also, financial advisory would require you to engage with different professionals like lawyers, accountants, industry stakeholders, and even regulators and policymakers. Specifically, when it comes to securing private equity funding, there are requirements that the businesses must meet, including governance structure and having a certain financial standing. At Renew Capital, I understand that your role extends beyond financial assistance, and also you help some businesses and corporate clients in making them investable for private equity. In your experience at Renew Capital as a financial advisor, how prepared are the businesses you've worked with in terms of governance and structure to attract PE funding, and what were the common gaps that you've seen in helping them get investment ready?
So the investment world, so coming from a bank going to the investment world, especially impact investing, it's a totally different world. I think it changes the way you look at things. So the main difference, as you know, is banks don't have interest in the companies, i.e., they don't have equity, or they kind of put something around risk, usually some kind of collateral. And so the way and the depth of analysis to provide a date for a company is nowhere near when you come to an investment world, where the scrutiny, the time, the process, the amount of people involved, like lawyers, accountants, tax consultants, all these people just for one transaction. And that kind of changes how you look at companies, how you see how investors value risk, how they value a company, how you deal with SMEs, how do you deal with corporates. So all these things, it's a whole different experience for me. And because Renew was one of the first players into the investment space back then, it I mean the number of transactions taking place it still is limited. Back then was also limited, and people don't even understand what private equity is. So I had the chance to provide actual trainings for the companies before going to any kind of process or starting any due diligence. You have to educate them. So for companies to understand that and say, okay, I think there is a whole different world here where it's not just based on debt financing. We can get financing from companies that can add value to us and also give us money. So, and this is totally different if you go to neighboring countries, Kenya, Rwanda, Uganda. They have experience and they have been doing this longer than us. So I think one of the challenges was, okay, people don't understand what private equity is, and there was a sentiment that my company is my baby, I don't want to give it away. But with, I think, the younger generation and with the new startups, you see that sentiment totally change because of, I think, AI or exposure, globalization. These young guys know and understand better than the old Navy.
I was having this related discussion with another interview, and one of the things mentioned was that around 5% of the applicants or the interested companies would meet the requirements to be investable. It's a very small number for me. Is that the case?
I would say 5%. I would say 5% is even an exaggeration. It means 5% means you look at 100 companies, you invest in 5 companies. Like in my experience, it's maybe conversion rate might be around 2%. So like you look at 200 companies, if you invest in 2 companies, that's good, because like the same thing that we talked about banks, I mean, banks have some kind of corporate governance structure because of regulation and NB's strict follow. But advisory firms, we talked, there is no, in companies, there is no corporate governance structure. It's mostly our family owned businesses. Father is a CEO, a daughter is a CMO, a son is a CFO. So you see where I'm going, right? It's kind of like it's based on dinner table discussions rather than board tables, right? So that is one barrier for investors to come in, because they need clarity, they need accountability, they need transparency to come in and operate. So that's one. And second is, key strategic decisions would have to be made together within the board, and that doesn't impress, or that's not something that local entrepreneurs are used to. So that shift is very hard. That's one of the reasons that they fail. And from a financial management point of view, it's just, usually this is a public knowledge, and I'm not making this up, this is a public knowledge. Companies used to have a book for a bank, a different book for a bank, a different book for tax purposes, and a different book for management purposes. So as an investor, which one are you thinking? And again, especially if you are a foreign investor, you have some mandate when you raise when you're raising the fund. So there are some requirements that you cannot, you have to fulfill, or you have to adhere to. So I think one thing that was very hard was those, like, financial management practice and corporate governance made it very hard for the companies to change, or they don't have that in place. So it's very hard to invest in these companies. So I think the conversion was very low because of these reasons. A third reason is, I think, valuation. Valuation, I think, if for every entrepreneur, I said the sentiment is, this is my baby, and everyone thinks their baby is special, and everyone thinks that. So it's overvaluated, and there is no logic behind it. There is no scientific reason behind it, and that makes it very hard for investors to negotiate, right? So I think one of the roles that advisory firms, and why also I started this, is, okay, these things need to happen, and there needs to be someone that understands the local context and how these people operate, and the requirement for foreign investors, and make sure these transactions happen. And that's one of the reasons I started this, is because I am seeing transactions fall through because of these kind of things I mentioned. So it's like, when a company plans to get investment, there should be a period where they need to get ready and sort the things that were discussed before going out and have, because it would also create value for them. So a company that has done this, if they have a similar revenue, two companies, one doesn't have this structure, the other does, I assure you 9 out of 10, this company will be valued more because of this corporate governance, financial management practices, decision-making practices. So I think, yeah, and hopefully this would change, and it has started to change, but again, it's very slow.
I think you've articulated the reasons very well. But the works expected from private equity firms in our country would be a bit different, because in other jurisdictions you would simply assess the status of the company, evaluate, do the due diligence, and then make a decision and proceed with the investment. But in our context, it's a bit different, because most of the investments businesses are not yet ready to be investable, even to be valued and meet any of the requirements from the financial management or the corporate governance aspects. So do you think the private equity firms or the advisory firms can also play a role? I think need to do this awareness creation or educate the business people.
Yeah, I mean, it's I think it would be better if they do it, but, like, looking at it from their perspective, they have a fund cycle.
Yes.
They have 10 years mostly,
Yes.
and in some cases maybe they get extension for 2 years. And within these 10 years, they have to find a company, they have to invest in the company, they have to grow the company, they have to exit and give back a return to their investors. So it's a very short window, right? So I don't think they have the time to spend a lot of time making sure companies are ready. Rather, they they ought to find companies that are ready and invest in them. And I think that mandate should maybe fall on us as advisors. Is okay, maybe part of the work that we can do is okay, take a risk bet on companies. So we do that. You bet on a company, say okay, this company has a potential, but it requires time to get ready for investment. And I think that process would would help that company be ready. And it's not a guarantee, like I said, it's the conversions are very limited. And because we have seen limited exits in Ethiopia for the last how many years, it has made it more difficult. And exit was difficult because of the FX challenges and different kind of regulations. So I think it's PE firms. I don't expect them to do this, and honestly, it's more on government to build that regulatory environment with the capital market and introduction. And this introduction of new laws is, I think, a step in the right direction. And for us, and also you are doing it right. These kind of platforms are creating platform where companies can actually learn from experts who have tried and done it here and there. So I think it's more on us and to attract capital to our country rather than for the investors to bring the capital, and also expect them to educate the market. Yeah.
After leaving Zuri Capital, you founded your own financial advisory firm, Zuri Capital. And Zuri Capital offers a range of services we discussed earlier, such as corporate finance advisory, capital raising, mergers and acquisitions, and strategic plannings, which will help businesses to navigate through the regulatory and financial landscape of the country. What motivated you to establish Zuri Capital, and what's the firm's vision in terms of what it seeks to achieve or contribute more broadly, and what were the challenges that you encountered in building the firm?
So I think why we started is because I mean the advisory ecosystem was very fragile. We have limited number of players, and what, back in 2022, before I started, I took around 6 months period of time to just study the market and look at what the key challenges were before starting this. And there were two things that were a challenge back then and still are a challenge. And so one is, I think, sentiment of the private sector towards advisors, consultants. The private sector thinks most of advisors just copy and paste and do not add value. So that's one. And this is actually driven, some part of it is actually driven by the consultants, at least the consultants who do that and who do to just copy and paste. It's just one individual, no corporate governance structure, nothing. So this challenge still exists to this day. That's one of the reasons, okay, we need to change that, and we need to have a local firm that's at least, we don't have to be the big four to succeed in this market. We can be local firms because we have precedents from legal firms, right? Legal firms, there, even though a few have done it. So why not advisory firms? And this is one. And second is, I said, like, transactions that can happen wouldn't happen because of the issues that we mentioned. These two things are the drivers why I started it. I think the vision is to be among the top 5 investment advisory firms in Ethiopia, locally owned. Of course, we have other people in the board and international experts in our board, but I think I feel kind of indebted to contribute what I have had in these 15 years. And despite the challenges, I believe Ethiopia can be a powerhouse in Africa. And for that to happen, we need to see capital moving from one place to another, private capital fueling businesses. So I think the vision is to be among the top five in Ethiopia in the next 5 years. And we don't want to be stuck in Ethiopia and only do operation in Ethiopia. I think there is a huge value and also moving regional. And we're targeting East Africa for now. That might change in the future, but at least regionally within Africa, we want to also expand and be present in at least other two jurisdictions. But we want to do transactions, even though we don't have offices, transactions across at least 6 jurisdictions within Africa. So that's, I think, the vision. I think for your last question regarding the capital market, so we're not licensed yet, so I can't say much, but what we're trying to do is we have been making preparations in terms of we have a board, we do regular board meetings. I think from the get-go, our financial management practice was good. We do it. I think we do good in that aspect. We've been building the team, training, coaching the team. I think in the coming months, we're hoping to get the license. We've been, I think, running around to get all the requirements in place. So I think we're getting closer, and we will hopefully submit our application and see when and if we can get the license. So but in terms of the service that we do, I think transaction advisory is one key aspect to it. So it could be debt, it could be equity transactions, it could be blended in some cases. That's one. Another is a strategic advisory to help, especially focused on the financial industry because of the obvious affiliations, insurance companies, MFIs, banks. Strategic advisory to position themselves in what's coming. And once licensed, we also want to do capital market related services. So these are, I think, the areas we focus on in terms of service providing.
Among the various services a financial advisory firm provides, access to finance remains one of the most persistent challenges faced by businesses, particularly small and medium enterprises. Lending through banks usually falls short due to collateral requirements, limited credit history, or rigid eligibility criteria, which makes alternative financing options such as PE increasingly important in the country. Securing such funding, however, requires businesses to meet certain standards, including sound financial reporting and well-established governance structure. In this context, what role can Zuri Capital play in helping business access alternative source of funding, and how do you work with clients to ensure that they meet the necessary requirements to qualify for such opportunities?
Yeah, so like access to finance is it's one of the biggest challenges, right? In the market. So I think one thing that clients, because of their exposure, there are some shelf products that they already know. It could be like working capital. It could be term loan, like 5 year loan, X interest rate. That's what available in the market, and that's what they know. But I think from our perspective, we take one step further and look at the company itself and what kind of funding mechanism can we put in place so that companies can make that jump. So one thing that we have used in the past is, I think there are some donor funded projects where you use the funding from the donors to pull debt financing at a much lower interest rate and get the companies into that circle. So the first loan is very hard. It's always very hard. But the following loans, because you have already built a relationship, because you have educated the company because of that process. So I think that's one thing we have done. We're also done with a different development partner, a model where companies can actually take loan based on their revenue, no collateral, small loans, but based on their revenue. So we built a model where it would basically based on their historical revenue, it would project their future revenue, and they only pay if they generate a revenue. Their repayment is also based on their revenue. So this is very good for businesses that has seasonality. For example, like a small shop that's selling um, say books for students would see a spike in revenue around August, September, when the calendar year starts, can actually pay more then. But again, revenue might decline in November, once the school year starts, so they will have to pay less because they have less revenue. This kind of flexible modalities we have tried. These are things that kind of adapted from other jurisdictions. So we've been trying to do these kind of things where, okay, depending on the client, depending on their dynamics, their industry, you try to find a solution that best fits their scale. And growing companies are like babies. They always need capital. It's not just a one-time thing. It's something that they have to do quite often, and it should have a long-term view. Okay, this is how I finance my first growth initiative. This is how I'm gonna finance the next growth initiative. I think those two things are very critical.
Yes. So you provide these advisory services tailored to the needs of the clients.
Needs of the clients. Yeah, in some cases we also work with the banks to introduce, like, the revenue based financing is actually a work that we have done with a bank, so that they kind of fit it to the needs of the SMEs. So in some cases that work would have to be given to the supply side, which is the banks. From their perspective, at this point there is not a shortage of demand for loans. They don't need to be creative at this point, but in the future that will change. So there needs to be, I think, development partners are doing some work in this regards, where, okay, the likes of World Bank, GIZ, and all these development partners are doing some work to change this landscape and make sure banks kind of practice some of these new products that can change the game for SME, to get access to financing. And that's the biggest challenge that we have.
Are there any other challenge, especially in the regulatory framework?
Yeah, I mean, regulation wise, I mean, you're more fitted to say, but I think unpredictability is one of the biggest challenge. That even from personal experience, you would see there are some things that are allowed in Yakasab City, but if you go to Boli, it's a different story. It's like two different countries. So I think that needs to shift significantly. I mean, ease of doing business is a big challenge. I think that's something the government needs to tackle. Another is, I think, corruption. It's now becoming more forward. The requests that you get is not healthy. I think we also need to put a stop on that, because if you look at it from a point of doing business, so for every day that I'm spending to get a small task done is adding cost on my books. Like, I need to pay rent, I need to pay salary, and tax authority still expects me to pay taxes. But again, I'm not doing my business because of these challenges. So I think ease of doing business needs to significantly improve. Like we don't need to visit government offices anymore. Like, I think that needs to change, and hopefully, I think there is a massive initiative that the government has started. Let's see how it's gonna pan out, but that needs to change. I think that's a serious challenge. Second, within that embedded, like I said, is the corruption, and also the corruption is now like, we don't have a system. That's kind of the reason that they give you, and if you don't pay, you basically don't get services, right? So that has been like, even when government is introducing technology, now technology is becoming a shield for them not to give you a service. Say, okay, we don't have a system and it's beyond my control. So I mean, like, there needs to be some kind of control structure where if someone says that, they need to get penalized, so that I think businesses, transactions, services need to happen. So I think one of the key challenges that we need to address is of doing business. I think in terms of predictability and regulation changes, I think that's needs to be there, and we need to create consistency. Same country, same people, same rules. So why do we have different interpretations? So I think that needs to change. I mean, there are efforts, like we have updated the commercial code, we have enacted a new investment law. That the challenge then becomes, so I was on this project recently, and I'm gonna tell you something funny. So, like, there has been a change in terms of refugees and what they can access in the country. So there are refugees that have a refugee identification, and they also have a FIDA number, which basically gives them access to open an account, and access data. Then when they go to a bank, they said your FIDA digit is not 15, but ours is 15, so we can't serve you. So this kind of, even at the private level, there is a sentiment. Even at the private level, we need to make it easier. There are countries that are competing for capital with us, and if we want to attract capital, I think we need to open. We need to be open. We need to take a step forward, and to make sure that these things are better. And one thing that we have to mention, unfortunately, is the security challenges and that we have, and the political issues that we have made it very difficult for people to move around, for items to move around. Supply chain has been disrupted. When supply chain is disrupted, I think the cost of doing business goes up, and no investor would want to come in that market. So yes, government is making changes in terms of regulations here and there. Admirable. Capital market introduction, very encouraging. But at the same time, peace and security is at the core of all this, what we're talking about. So I think there needs to be some kind of change that can support the rules and the regulation changes that are happening here. Otherwise, it's going to be very hard.
Yes, that's true. Historically, we used to see Forex as a major challenge when we read the reports from the different organizations for Ethiopia's doing business, but now it has changed, and we're seeing bureaucratic inefficiencies, the challenge in the public service, like the corruption, and even the security issues are going to the top now. So of course we need to work on those if we're going to create real impacts with all the measures and the reforms that the country is taking. We need to have those in place. We need to really work on those. I agree. You were discussing about the financing options with no collaterals. I'm going to ask you about these collateralization issues. We have now the legislation for collateralization of movable assets, and we've established collateral registry offices. How has this impacted the access to finance? Because previously only immovables were being used as securities for financing. Now we have this law, we have this registration system. How has it impacted?
So in principle, this should have moved the needle a bit further, but I don't think it has yet, and because for the last 3 years, the banking sector has really struggled with liquidity. So it's not that it has the money to provide, and there was also a cap in terms of the loan growth year to year that has limited their ability to provide financing. So I can't say at this point. Yes, I think it's a good move. It's a right move. And for example, like most of these startups have some kind of technology. So in an ideal world, their IP would be a collateral to get financing, but the money is not there yet, right? So because of the liquidity crunch, but I think it's a critical regulation and a step forward from the from the regulatory bodies to make sure, because 95% or I don't know, majority of the loans that people access are based on bricks and mortars, and when when government says movable asset, people think of vehicles, but I think it should be more than that. Ideally, what should happen is, so we should have financing based on invoicing. So you're a company, you supply you supply a product or a service to another company, and that company would give you a payment voucher. Anywhere else, you use that payment voucher, you give to the bank, and they give you like at some discount rate. It might be 60%, 70%, depending on the risk exposure. They give you financing, so you don't have to wait 30 days, 60 days to get the payment. You can get short-term financing from the bank. So I think there are some initiatives that are started around invoicing, warehousing, and sales contract should be like, it's common in the export world because of the FX generation capacity. Banks tend to be more relaxing in that sense, but sales contract, given that you have done some due diligence, should also be in the future, ideally a way that we can use them as a collateral to access financing. So this kind of things could be a solution and for that, and eventually we'll have debt instruments like commercial papers, bonds, which can also be used to back as a security for accessing debts. I think within the capital market and these regulations, I think it's gonna change, but for now the challenge has been, I think, accessing that resource has been very challenging for the banks. But assuming that is not an issue, then we can use all these kind of things, and banks can be more creative. This is something that came to mind, but bank can be creative and making sure that they can use different means to use as a collateral to provide debt financing.
While feasibility studies and financial projections remain central to advisory services, non-financial dimensions of a business, such as environmental, social, and governance (ESG) considerations, are becoming increasingly important in shaping long-term value and investment readiness of businesses. ESG frameworks help business operate more responsibly, manage non-financial risks, and appeal to investors who are increasingly guided by sustainability criteria in their decision making. Globally, ESG performance is a prerequisite for accessing finance. However, in Ethiopia, ESG is still at a development stage with no unified regulatory framework, the legislative provisions being scattered across sectoral policies. Given this context, what role does Zuri Capital play in helping businesses understand and integrate ESG principles into their operations, and how do you support clients in aligning with these emerging sustainability standards to improve their investment appeal and long-term resilience?
So ESG is a very critical part of any investment that's happening. Depending on the ticket size, there might even be a separate ESG due diligence that is part of that transaction. And part of the thing that they do is, for example, they will check if the target company has employed within the workforce, if they have displaced any community nearby where the facility is, and if that displaced society has been compensated, has received a proper compensation when they are moved from that area, and also additionally, like the impact of that target company on the nearby community. It might be a farmer. If there is any let's say sewage or anything that could impact the farmer's ability to generate income, those things would have to be factored in when you're looking at any typical transaction. So I think it's very critical. It's not just the environment, it's also the surrounding communities and their ability to generate income, and also other factors like underage employment, and sort of related with human resource are gonna be also a key factor in this. And when you look at this and valuation, so same company, one who has a robust ESG standards, same company, one that doesn't have, would definitely, this would definitely impact the how an investor would value a company. And because, for example, a company that doesn't have a robust ESG practices, investor would coming in would have to invest money, so that would need to be taken out of the value of the company in one way or another. So I think it has a direct impact on the value of the company, and also the likelihood an investor would come and invest, because if it's a severe condition, then it might even be a deal breaker for the investor. So it's very critical.
Yes. When you do the feasibility or when you do the valuation, how does Zuri Capital integrate these ESG considerations? Is it in all projects, in all investments, or are there any specific investments that ESG would be considered as critical?
So it depends on the deal we're talking about. Smaller deals might not have, I mean, the capacity to do all this, the ESG due diligence, and we're not ESG experts, but there are certain things that you can do to make sure that there are policies and procedures in place the company uses and is aware of them when while doing business. But for a bigger transaction, there's going to be a separate due diligence export. Usually these guys come from Kenya or South Africa, and they come and do a due diligence, and based on that due diligence you would factor into the financials and say, okay, ESG would require X amount of money, which can be taken out of the gross capital, which eventually would impact the value of a company. So these kind of sort of things that you have to incorporate. But if it's a smaller deal, then I think you would ask some of at least the basic questions, so that it would tick some of these basic boxes. But depending on how complex the transaction is, the ticket size, and the scrutiny on ESG would be bigger.
Another critical area where advisory firms provide valuable support is mergers and acquisition transactions, which is a sector or a service that's gaining relevance as Ethiopia's private sector emerges or matures and the capital market framework begins to take shape. Merger and acquisition transactions offer companies the opportunities to scale, restructure, or diversify, but at the same time, they're also complex undertakings that would require careful due diligence, valuation, negotiation, and different regulatory compliance. From the Ethiopian perspective, merger and acquisition activities must go through various legal and institutional requirements, including different approvals, such as the approval from the Ministry of Trade and Regional Integration, the Capital Market Authority, if the business are registered to engage in the market, and also National Bank in case of financial institutions. In this context, what kind of support can advisory firms provide to clients who would like to engage in merger and acquisition transactions, and how do you position the advisory firms to add value throughout the deal cycle, the merger and acquisition deal cycle?
I think as in any transaction, I think one key challenge is, I think the professional service landscape has not developed yet. So I think there are like buy side and sell side issues that you would face, and you need someone operating between these lines, your tax consultants, your lawyers, your financial advisors. Those guys would need to play a critical role, so that the M&A space would develop more. That's why we're only seeing a very handful transactions taking place. This is one reason. The second reason has been, I mean, the investment regulations, right? Because there were a lot of sectors that was restricted for foreign players. That would automatically kind of like take out a majority of foreign investors who wants to come in. Even recently, I mean, there are sectors that were open like retail, telecom, but despite being open, we're just discussing, as you know, like, okay, it's not easy to do the transactions because there are government offices that need to be involved in this process, and those involvement and those things do take time. So I think from an investor point of view, I don't want to spend a lot of time just going to from one to another government offices. I want to get done and as much as possible start working, right? So because time is of essence for them, like every day is losing, like you spend every day on a government office, it means you're losing money, and your IRR is going to be declining because IRR is a factor of time, and with time and every day that you are not generating any revenue, it's you're losing money. So I think these kind of things are also critical from, I think, from a regulatory point of view. Again, from the company's perspective, it's also good to understand and see, okay, I think from a company's perspective, when strategic investors come and to invest, it's not just money that they bring in, it's also expertise that they bring in. So I think we need to be open for a change and make sure we can implement the corporate finance and financial management practices that would build the structure for the company to take the next growth. So I think if you from different angles, you need that, and from also from the foreign investors' perspective, there are things that they need to understand about the local market dynamics, and because it's a different culture, a different market, what worked elsewhere might not work here. So I think this responsibility partly falls on us so that we can be the translator for the foreign investors who don't understand the culture. Also, culture also needs translation, right? It's not just the language that needs translation. Is also the culture and the context. So I think when you understand the culture, you have a better chance of getting acquainted with the local investors. I think Chinese have shown that they have done that, and if you see, like, you have a better success rate from Chinese investor than like other like Western investors, because one reason is because they have kind of adapted to the culture so that companies feel more comfortable. So it's kind of like everyone within this space would have a role to play in terms of like making sure we have a better M&A space, and hopefully because of the opening of the capital market, because of the liberalization of the banking, we're gonna see more different players. Like this is now all Ethiopian's targets, like foreign company, but M&A now would eventually happen between even local firms. Okay, so the same dynamics, but I think the environment is gonna change for good.
Yes. How do you think the forex market liberalization has impacted this M&A space?
It's been one of the key challenges for foreign investors. How do I get my money out? Is like the husband, the $1 million question, and that's part of the reason why foreign investors were more drawn towards export-oriented companies. So it's gonna be a very big part of this because investors want two things, right? One, they want to see other investors invest and take their money out, and they want to make sure the landscape is predictable and the rules and regulations, the playing field is fair. So I think FX liberalization is a key factor. For example, one of the challenge has been, for example, an investor targets an export company, and export company X earns X amount of per on $1 in the official rate, and there is a parallel market rate which is almost double than what the market is. And looking at it from a foreign investor point of view, it means for every dollar you're sending, you're losing money, because obviously they can't participate in the parallel market. Everything has to be by the books, on the books, and through official channels. I think like trying to just create a similar market where there is no literally a parallel market is critical, has been critical. Again, people argue that we're currently seeing a parallel market where there is a rate difference. It's not as it used to be, but it's something I think NBE needs to work on critically to make sure that it's not going to happen again and the gap kind of starts to widen again. So I think that that factor is like a result of different things, right? It's demand driven. Like, and if there is the demand is greater than the supply, then it's gonna be that way. So one thing you have to do is also like solve the peace and security issue, which opens door for more businesses to thrive. More businesses thrive, our export earnings grow, and people have more confidence to invest in this country. So we'll have more inflow from the diaspora community, from other investors in terms of FDI. So I think it's not just a result of one thing, it's like a mix of different things, but liberalization by itself has made it more easier. And I've heard that all the corporates have had the chance to repatriate their dividends since the liberalization. That's a huge, I think, step in the right direction. I think to get that momentum running, National Bank has been availing foreign currency for commercial banks based on the auctions that they are holding. I think that needs to continue. But beyond that, that's not a long-term solution. The long-term solution is to create an economy where it's easier to create growth, to create value. So that depends on regulation, ease of doing business, peace and security. If all these things improve, I think we all know and I think agree the potential that we have as a country to be a powerhouse, not just regionally, but also across Africa.
You work with development partners, financial institutions, investors, businesses. Uh, how has it been perceived by the investors and by the different stakeholders who are interested to invest in the country?
I think that the sentiment has been very positive. I mean, very positive. You see some of the changes that were made, not just in terms of changing the regulations and creating one market, but also in terms of like the issues that we mentioned, for example, in setting up an independent board member, hiring external experts within National Bank itself, changing the investment regulation, which previously have been enacted, but without other support structures is not sufficient by itself. So like liberalizing the financial sectors, again, there are restrictions around how you can enter into the financial landscape. I think in my mind, I believe those restrictions needs to be relaxed a bit if we want to attract more capital. But in terms of sentiment, I think it's very good in terms of the development partners, people from outside. I think the impact of this has been like inflation from on people like you and me on a regular basis, that has impacted our life. So a more negative sentiment has been from the local community rather than the community outside. I think our job now is to make sure that I think we can balance that sentiment locally, so that because that would be the basis of everything, right? That creates a demand. That's gonna play a key role in creating a better environment. So I think in terms of international community, sentiment has been very positive on the developments.
Finally, Ethiopia's ongoing economic reforms, starting from financial sector liberalization and capital market developments to telecom and logistics sector openings, are expected to reshape the broader investment landscape and also create new opportunities for both domestic and foreign investors. we also expect that such reforms will take root and are likely to attract a more diverse class of investors, increase competition, and also accelerate private sector growth across key sectors. In light of these shifts, how do you assess the current investment opportunities in Ethiopia, particularly for foreign investors?
I think in my mind there are three key sectors that are going to be I believe the key drivers for Ethiopia. One is the tech space. I mean, like you have around 45 million mobile internet users currently. That's like one third of, maybe a bit more than one third of the total population. So it means that is an opportunity for businesses. And you're seeing all these young entrepreneurs coming up with different kind of solutions that are impacting the lives of thousands. So do you, like currently as we speak, a lot of transaction is happening on Telegram. A lot of transaction is happening on Facebook Marketplace. A lot of transaction is happening on TikTok. These are the result of the technology boom that we're seeing. I think there is a huge potential. I think within that space, and I think from our perspective, what we can do for this type of businesses, most of these businesses are very young entrepreneurs. These are young graduated. They might be medical doctors or engineers, have no clue whatsoever about business in general. So I think making sure they are investment ready and making sure they have all the documents and the financial documents, the investment memorandum, legal structure, corporate finance structure, that's critical one. And also representing them when they are dealing with potential investors, because potential investors are people who have experience. These guys are very young. It's very hard for them to make sure they get the best out of a deal. So I think our role would be working with them so that okay, they understand even the terminologies that these investors drop on you are something so foreign for them. So I think supporting them and hand holding through that process is gonna be one key critical role that we're gonna play. I think the second sector that I would say is very critical is agri sector. So however we want to ignore it, 85 or 80% of our population is still a farmer. So it means like 8 in 10 of people that are living in this country are farmers or associated to farming in one way or another. So it's a sector that needs to change, because like part of the reason why we're importing so much is because we don't produce enough. So I think agri sector is also a sector that needs to significantly change. One, we have the resources, we have a land that we can use, we have water. I mean, we have the environment conditions, that I mean the weather is good for agriculture. So I think agriculture is going to be a key sector. So, and for example, over the last 3 years, we have worked with more than 25 agri sector businesses and helping them secure debt financing. So our role has been, even from a bank's perspective, they think agri sector is risky, and it is risky in a way because of the weather changes and the supply chain issue. So I think there you have to find ways where okay, there are donors and there are partners that you can use and leverage to make sure these SMEs can access financing from banks, and agri SMEs create a lot of value. So imagine if you go to Arbament now and if you see a banana farmer, the price they're selling the banana for and the price we're paying here is totally different. It's like 10x of the price that the farmer is getting. So what these businesses are doing is creating a direct linkage between the farmer and the market. So I think, and also creating and improving productivity. So like it's amazing what kind of products people are coming up with. So I think within the agri sector, I feel very optimistic about the sector, and if we have peace and security, I think it's going to be one of the biggest sectors that's going to change a lot of lives. And it's the impact the agri sector has is just beyond measure. So I think another big sector is also agriculture, and anything related with agriculture. And I think the third and most also another sector is logistics. So how many logistics companies do you know? Like only a few, right? How many of them operate at, I don't know, like at a high level of efficiency? Again, we're not gonna be running out of names. So I think logistics sectors, because of its role, because we can do so much if we have the right logistic infrastructure, because it's important for agriculture, it's important for even export sector, it's important for import sector. So I think logistics is going to be and has to be a key factor. And because if you look at the road infrastructure in Ethiopia, it's not bad. I mean, it's growing, it's not bad, but the problem is more or less to do with we don't have enough logistical capacity uh, to serve what the country needs. It's a huge country. I mean, in terms of population and in terms of geographical size. And if you ask a question saying, okay, do we have enough infrastructure? Do we have enough companies to serve this population in this country? It's going to be no. So I think the logistics sector is something that has to change also. So I think particularly on logistics sector, the involvement of foreign players with huge capital investment is required, and for them to come, I think we need to have like a better peace and security and a more of a relaxed requirements so that logistic companies can come and invest. So I think these are the three sectors I would say are very critical.
Thank you so much, Yosef. It has been a very interesting conversation. I enjoyed it very much. I hope it will also be useful for our audience. Thank you.
Thanks for having me. It was fun.